So the question comes up, does increasing your stop loss reduce your risk? How could that be? This strategy uses a $400 stop loss by day. It uses a $1,000 stop loss by night. It's a swing trade system. It can hold positions overnight and over the weekend. And so we have a stop loss in when this market is open. It could gap beyond that. And let's look at the results. 63, 8, 62.50. By the way, this strategy works back to the 1980s on pit data. So it's a very old strategy with a long back test. 52, 37.50. Had this strategy for a while. We didn't have it back in the 80s, but developed in the 2000s, so 2009 time period. And so 52, 37.50 drawdown, 139 average trade profit. A couple of the first numbers I look at, and then the equity curve. Nice equity curve. Had some drawdown here greater than the past, and then we've kept this strategy and it's done really well this year. So what would be the cause of that drawdown? Was our stop loss too tight? So on a per trade basis, you know, if you increase your stop loss, your risk goes up on a per trade basis, but can you decrease your drawdown? It's important to have the right stop loss. If you get stopped out too much, then you can have a greater longer term drawdown. So back testing this, look at these studies. Let's edit this strategy. So we're editing this strategy, and you can see here it's got first bar time, new, old. Soybeans used to open an hour after the stock market, the day session. So there were some different times over the history of this, and then it didn't trade as much at night, and so we didn't worry about the stop loss at night. And then recently we've put it on the 24-hour session data. It doesn't trade 24 hours a day. There's a time periods when it's closed from 1:30 Central, 1:20 Central till 7 o'clock Central, and then for 45 minutes before it opens each day, and then it's closed on the weekend. So what if we change our day trade stop loss? What if we just double it? What if we double our day trade stop loss from 400 to 800 and keep our night stop loss at 1,000 and still hold it over the weekend? And then let's see what the results will be. Let's see how this changes. Keep in mind 52, 37, 50 drawdown, 139 average trade profit. Here's the equity curve. Remember those numbers. Pause the video while this reloads. It will take some time to reload this. So this finished loading. Oftentimes when the chart reloads, you have to click on this button right here in TradeStation 10. That's one of the differences between TradeStation 10 and 9. In TradeStation 9, it automatically updates the report. In TradeStation 10, you have to hit the refresh button. So it goes from 63 to 79. This number goes from 139 to 176. And this number goes from around a little over 5,000 to 4,062. Net profit as a percentage of drawdown goes up. So this actually, on a trade-by-trade basis, our risk goes up, but the long-term back test shows less risk. And so a much nicer equity curve. And so you have to consider the fact that a bigger stop loss, while on losing days, might not be something that you like to see as much. You have to consider how this goes, the percentage of winners goes up from 53% to 69%. So we don't always chase bigger percent profitabilities, but we want to give our strategy room. And soybeans is volatile lately. It's trading at higher levels than it has in the past. And so something to consider. I'm thinking about adding a big stop loss soybean swing to the portfolio calculator to see how it works in the portfolio calculators in some of the portfolios using a bigger stop loss.